The Rebel Capitalist Show.
You've got a chart deck that we're going to go through. It's so people can hopefully get their mind around what is happening, the supply demand dynamics. Is that what your chart deck is dealing with here mostly?
Yeah, what I'm trying to do, George, is to try to help people understand what the hell is going on in the world right now. And I don't mean politics and, all that kind of stuff, but energy prices. And as you know, and we've discussed many times before, I mean, energy is the economy. At least
Right.
that's what I believe. And if you want to understand what's happening in the world, you need to understand the economy. And if you want to understand the economy, you better understand energy, which today means oil. So,
Right.
so the my belief, I show a quote here from my colleague Jim Kunstler, um, who says that we're in the midst of a long emergency. Okay, I think he probably said this back in 2008 or 2009, and it really hasn't changed. And this long emergency is that we have been kind of denying the fact that we have any problem with our fuel supply. And he's talking fossil fuels there, which include oil, natural gas, and coal.
Right.
And the point he's making is that we are so dependent on these things that any slight disruption in supply or demand creates unbelievable chaos in the economy and the world. And there's just really no possibility that alternative energies, renewables or whatever, are going to solve the problem. That's his belief, and I'm not endorsing it, except that kind of in a general way, I think that describes what's happening right now. And so we got a situation in the world, and we've had it for for at least 6 months, where we're short of everything. We got supply chain problems, can't get what you want, can't get what you need, and the explanation that we get from our talking heads in the media and the politicians as well, it's just we're recovering from the pandemic, and once we get everything back into order with supply and demand, everything's going to be fine. And I sure hope they're right, but my data says no, we're not going to be fine. And we worry a lot about inflation, and we've got economists that dream up all sorts of esoteric explanations. And I'll show you some charts that you and your viewers decide if I'm smoking something or if that makes sense.
Uh,
Oil prices, as you said, I mean they're above $110 today. That's like a 7-year high. Natural gas and coal prices are even worse, not in terms of dollars, but as a percentage of increase. And part of the reason we're here is got a lot of good and well-intentioned people trying to get us off of fossil energy, and they don't get that we can't do it. That's making things worse, and this just isn't going to get any better. So I think it's time to adjust, relax, and say, this is the world going forward. And I'll tell you kind of at the end that, part of accepting reality in my worldview is, this belief that climate change is somehow due to natural causes, or it's a hoax that's, been concocted by, academics looking for funding. And I mean, everything is manipulated in the world. But to me, that whole belief system just complicates our need to just address reality as it is. So I'll leave that where it is. I showed this slide in June. I'm going to show it again. Welcome to the energy transition. When you want to change from fossil energy to something else, you end up with chaos. And that's what we got. This is European natural gas price. And I mean, you don't have to be a statistician to see that we were like at $6.50 per million BTUs in December, and we got up to $60 in December, and we're up to almost 40 right now, kind of as a result of the Ukraine invasion. But I mean, the average price has pretty much gone up almost 5 times since the end of 2020. So the origins of all this are complicated, but the basic reason is that some people decided, oh, well, we can just get rid of oil and gas and nuclear and and coal, and we'll be fine with renewables. And guess what? That just isn't working. Coal, look at that, man. I mean, this is global coal, and I mean we're at $321 per metric ton, and just a few months ago we were at 100. Now a lot of that's Ukraine, Russia, and all that, but the average over since September has been 200 compared to the average in 2020 and to 2020, which is about 70. I'm just going to briefly say that China is important, always important. And China's been trying to do a whole lot of stuff with power rationing and trying to clean up the air there. And so they've created a sort of an artificial power shortage. They've stopped importing coal from Australia, which somebody needs to explain why we did that. They did that. But the bottom line is that the Chinese economy has taken a big hit because it's operating at a lower level of activity because they don't have enough gas, they don't have enough coal, and the government's imposing all sorts of, crazy kinds of restrictions on the people that make those things. Not going to talk much about Evergrande, but this slide just shows that China's been building cities that no one lives in now for about 10 years, and it's coming home to them, and the government's not doing anything about it. And I'm not saying the government should, but you gotta. I mean, Evergrande is just this humongous company that is in default right now. The shadow credit system is trying to absorb the debt, but I mean, 10% of China's GDP is in real estate that probably nobody needs, developments of buildings. And you're more of an expert on this than I am, George, but if Evergrande continues to go down, I mean, the deflationary repercussions around the world are huge. Supply chain problems. This is Port of Los Angeles, and we don't hear much about it anymore because we got bigger things to worry about, but it hasn't gotten very much better since it was all over the news. So, we still got like 64,000 empty ships that are just sitting around there because they can't go back to anywhere. Better than 90,000. We got 69 ships waiting to get in as opposed to 109 a few months ago. But, you could say it's better, but it sure isn't solved, and it isn't going to get solved.
Right.
Container shipping. I mean, my God, I mean, the cost of shipping anything around the world's gone up fourfold. And then there's Ukraine. And I'll slow down here just a second. Europe gets 40% of its natural gas and 25% of its oil from Russia right now. And that is a big problem today. Right now, the cap at the value of the four Russian energy companies is down 95%. 95%. Okay. Now some of that is just freezing stock markets and all of that, but this is a huge. Nobody's buying Russian oil right now, and the reason that oil is 110 or 111 today is because Russia is the second largest oil supplier in the world, and today, I mean, we don't have a shortage, but today nobody's buying Russian oil. So 10 million barrels a day. Where's it going to come from? We don't know. Another thing that many people don't understand is that 25% of the world's grain comes from Russia and Ukraine. So, whatever's going on between those guys, it doesn't look good for bread supply for the world. Lots of things happening there. BP says it's getting out of Rosneft. I'm not sure how Rosneft is a big oil company in Russia. I don't know how they do that. Norway's saying they're going to kick Russia out of their sovereign wealth fund. I don't know how all that works, but right now things are just not looking too good in that part of the world. So here's oil prices. This is Brent. This is the international price of oil, and it's increased fivefold since April of 2020. Of course, that was rock bottom for all time, but still, I mean, it's as of yesterday, futures were $105, and prices have increased 50% just this year, and this year's we're just in the third month, so that's a big deal. This is, a little bit of a complicated graph for some people that don't follow the oil business. So let me just cut to the chase here. This is the supply balance of oil in the world. The blue bars mean we got more than we need, and the red bars mean we don't have enough. And what you see is that the red bars down here in the last three quarters of 21 were the lowest, the most negative, and the largest sustained deficit of oil that we've ever had since we've been keeping track of this stuff. So it's getting a little bit better, but it's going to get worse before it gets better. So, this is sort of a historic level of we don't have enough oil in the world. This just sort of focuses on the near term. It's 2021, 22. Of course, 22 is largely a projection. The gold means we're in deficit, and the blue means we're in surplus. So you can pretty much wipe off the surplus from this chart as a rounding error. Supply is in green, demand is in brown. Doesn't take a genius to say, well, it was bad in 21, but it's getting better. Well, it's getting better because price is high. And so, we're going to make a last ditch effort to produce whatever we got left. And then in the fourth quarter, it gets almost just as bad as it was last year. And again, these are going to be wrong because they're just somebody's forecast, but notionally, they're correct. So the point is, things may seem to get a little bit better, but they're still bad, and they're going to stay a lot worse. This is a chart that shows where this is the U.S. Department of Energy, thinks that new production is going to come from. And you can see that 38% of it in the title comes from Russia. That ain't happening. So already we're in trouble. 26% from OPEC. So, this is just, these are sort of the usual suspects that have a little bit more to produce. And they will. I mean, with oil at $100 a barrel, just about everybody's going to produce what they can. But, let's zoom back. And this is the world's oil supply by who matters since 2000. And the most important and the only important thing you really need to see on this chart is this bold dashed black line.
Right.
We reached a plateau. The world simply couldn't produce any more oil. This is crude oil and condensate in this chart, if anybody cares. It's not, gasoline and diesel and all of that. But it's, it'd be the same chart, just higher if it were. We reached a point in 2005 to 2011 where we just couldn't seem to get off of this plateau of about 73 million barrels a day. And that's because we were focused on giant fields. You find a giant field, it takes 7 or 8 years to bring it online. By the time we did, a whole bunch of other fields would have depleted, and we'd have a net gain of zero. And the result was that oil prices went up a whole lot. If you remember, in 2008, we were like at $140 a barrel.
Yep.
2011, 12, 13, 14, we were well over $100 a barrel. And then the U.S. in blue with our shale kind of came to the rescue. We produced a ton of growth in oil, and prices collapsed. They got real low in 2014. So the point of all this giant, like fault line right here, that's 2020. That's what happened when COVID stopped everything, economic activity, demand for oil, production of oil. And we've kind of climbed back up above that 2005 to 11 plateau, but we're still way short of where we were at the end of 2018. So demand is pretty much back to where it was. Supply is lagging by 6 million barrels a day or so. And importantly, the rest of the world, everybody other than, these usual suspects in red down here, the rest of the world, their incremental oil production, their growth is like the lowest it's ever been. And the rest of the world is a big number. I mean, it's everybody except the 10 or 15 big producers.